Got it? Do you want me to write it?
And you always have it up.
Would you like?
And I've got it on here.
Right, it's getting old. Bringing in all those big checks that we had to.
Oh, please, that's not my check. Ooh, let me guess, is this Miss Kathy Bullock's pen?
No, it's actually mine.
Oh, really?
She doesn't have it because I'm old.
David, hey,
Hey,
nice to meet
good
you.
to see
Hey,
you.
a lot of people know you.
Oh, do they?
Oh my God, David. Like even Gail says, we can get me this one, you know? You work with Gail?
I
though?
do.
Yeah.
I've never been for a long time.
Awesome.
Were you?
This is probably the third time I've come in. So, yeah,
Awesome.
it'll be fun. I think I'm scheduled to go in April too. So I need to circle up with folks that do like the CE courses with Keller.
Yeah, that would be awesome. If you can give us the credits as well.
So you've got your CE courses approved by Greg?
No, that's right. I need to circle up because I'm starting to do
You need one for
two
the
brokerages.
Yeah, check that. If it runs out, let me know. I got one.
But they're trying.
Maybe you'll remember me then.
I don't know if I have to get certified, if the broker gets certified.
I remember you from the class.
So I did this. I had like intro to commercial approved.
Okay.
You have to write it. It
Okay.
has to be 3 hours, not 3 hours or 10 minutes, 3 hours or 2, I mean, 3 hours. Your PowerPoint. And then you have to have an outline that says this page is going to take 2 minutes.
Oh my gosh.
Excel spreadsheet. That's what.
Interesting.
Yeah, but then you submit it to Greg. You know,
Got it.
talking
Yeah,
about,
yeah.
and then, well, yeah, you can change, and, you just approve it, and then you just go to the broker and say, I've got 3 hours. I'm about to
I'm gonna
write
give
a
you my
murder
office
report.
line.
Oh, it's,
Yeah, if it's possible.
don't watch yourself. Middle of the night.
It rusts my cell anyhow, so
Well,
I figured might as well just start the office and see if we can get them there.
How you doing?
Hey.
Hey, Warren. Catherine, I'm here. I'm running down the hall from that.
okay, thank you for coming. I love you, David's.
Who likes animals?
What?
Who likes animals?
Who likes animals?
Yeah,
Why you say that? We all do.
I had baby goats born last night.
Oh, wow.
What you gonna tell me I had something with that?
No. I have 3 females, one aborted one that was fetal demise. But I think she's still pregnant with another one. She's huge.
Oh, that's weird.
Another one delivered 2, and then I got another one that's about to deliver. They're miniature Nigerian dwarf. Yeah,
Oh, those like those pictures.
I'll show you. The ones that delivered already are pygmy. Yeah,
What do you do with them?
they're pets.
Oh,
Goats are
now.
so much fun. I had no idea how much fun they are.
I've always
Look
wanted
here.
to take.
Now, who is that?
Well-
Why can't I?
Wow.
That's just about a couple hours old. Up walking around. They were walking in 10 minutes.
I follow
It's
one on
amazing.
TikTok.
Yeah.
My sister likes it. Yeah. Unbelievable.
They're so cute.
Wow.
This is the male and that's the female.
Wow.
Maybe
Yeah,
those. Maybe
Right.
three.
Well, this one had 2. Another one, this was aborted.
They were disappeared.
She didn't try to clean the clear like it was dead.
They know.
She was born before I got home yesterday. Better than
I was
all, I
with
guess,
these
like
two.
an all natural kind of version.
I see they know, there's nothing
They're
here.
cute.
You do TikTok, we talked about that,
I
right?
love TikTok.
So there's one that the lady brings it in her. Who's laughing at me TikTok?
Both of y'all.
Hey.
I'm going to sleep.
Hey, old people do like TikTok too.
I don't even know what TikTok is. I'm way behind.
Okay, I'm feeling good then.
No, it's adorable. I just follow the animals, but, so there's one lady that brings her goat in the house and it comes running around. I'm like,
My Melgo, I bought him, he was 10 days old, and he had never stayed outside. As soon as he was born, they took him in the house, and he was bottle fed. I had to give him a bottle 3 times a day. I felt like I had another kid.
Well, you did have a kid, isn't that what they
He
call
was kid, that's where the name kid came from.
Right.
Yeah.
Yeah, no,
He,
livestock is outside.
even now, if I sit down in a chair outside, he tries to crawl up and sit in my lap.
Oh, wow.
He thinks he's a puppy.
Oh, well, good.
It's so funny.
Somebody else is in there.
Yeah, I mean, you gotta use it.
Does it work?
Haley,
The pen doesn't work.
that's Haley, there's that.
Is it not working?
Well, how do you do it?
Is it not working?
Yeah.
Okay.
Oh, is that
I
called?
grabbed it off my desk.
My granddaughter loves
I
it.
had a bunch of parts sitting on my kitchen counter that I forgot to bring, so I just pulled a few of my wallets.
Oh, well, that, yeah, well.
So all my info's up here, so you'll be able to,
Yeah,
if you have questions there, you know we're fine.
Well, that's what happens on Amazon. I guess.
I walked out without my watch, so.
Oh, wait, then.
It is
Happy
9:30.
to wait or happy,
So I know
you can go ahead, it's up to you guys.
a couple of people will come in later and join us. I don't know. Let me see.
How do you know who's on here?
I'll
Participants. Oh, we do have a few. Okay. So let's go ahead and get started. Welcome to 2022, the Sugarloaf Commercial Committee. Haley, thank you for being on the committee, and Nick White, thank you. David is an adopted member from the North Gwinnett office. And so monthly we hold meetings. We have great speakers to come and talk about, mostly we're focused on commercial, but right now we have a CPA willing to talk to us that is also in real estate. I'm thinking you might want a loophole somewhere when you're doing your taxes, or you can refer him to your, it's being recorded here. Or you can refer him to your clients. I think it would be a great resource because you are the professional in the market and you need a list of vendors that knows real estate, not just a CPA that knows taxes, but knows real estate. They're also an agent, is that right?
I have a license, but I don't practice.
No practice,
Yeah.
but so, but that kind of puts you in a category.
I
that not many
understand what
people
you're
are.
going through. Commercial agents are actually the largest industry concentration of people we service, so.
Yeah.
We hit most of the big box, Transwestern, CBRE, Colliers, Cushman, Savills, all the big players.
And so he can set you up where it's just automated, because that's my struggle. I need automated. Before David, my CPA, she did not know real estate. Fourth quarter, I wrote a $95,000 check to the IRS. Cannot tell you how painful it was. And then when we start talking about it, they're like, yeah, you didn't need to do that. Well, they're not giving you a refund. So do your taxes right. And so with that, I present to you David Miller.
Thank you. Like you said, my name is David Miller. I am the managing partner of Capwise CPA Group, Capwise Financial Advisors. And like I said, in real estate professionals, brokers, associate brokers are the largest industry concentration of folks that we serve. My book really expanded and originated from commercial real estate agents in Atlanta. So I do understand what you're going through. A lot of times it's really important to be on the same page, speak the same language. And so it's really important to me that we focus on the education and understanding why we do things, how we do things, what's the real reasoning. Because I think too many folks, whether it's an attorney or a CPA, provides a service without the education portion. So it's really, really important to be transparent as to the how, the whys, the whats, et cetera. So I will go ahead and get started. This is my thing, like I said, managing partner at our CPA Group. And I am a licensed realtor, although I don't practice. I do maybe 5 or 6 transactions a year, mainly for tax clients, mostly investment properties, all on the residential side, nothing commercial from a personal standpoint.
3 girls?
3 girls, that's right. I do manage and own a small real estate portfolio personally, 3 residential and 1 commercial. Obviously, famous quote, Ben Franklin, everyone knows this, nothing is certain but death and taxes. So Can't avoid it, but best to be educated, understand how to take advantage of low-hanging fruit, how to be efficient. Really, at the end of the day, a tax advisor and a CPA should be providing after-tax net worth. It's not about tax returns. It's not about compliance. While that's important, and while that's honestly 9 out of 10 clients that come in the door for us, it's really about net worth. Tax is a small aspect of the financial plan. And so really it's trying to understand it from a 30,000 foot overview as opposed to, okay, what do we need to do on Schedule 1 or Schedule 3? It's really net worth. So if your relationship with your advisor is compliance central, then I think you should reevaluate what you're doing. Basic agenda, and I was trying and get a gauge of who I'm talking to. So mostly commercial in here. I'm not sure who's on Zoom, but how are you guys set up from a tax perspective? Do you guys file 2 returns, as in a corporate return and a personal, or are you guys filing only on Schedule C from your personal? Just show of hands.
Schedule C.
Schedule C, Schedule C,
Sub-S.
your S corp.
Schedule C.
Schedule C.
That's
Okay.
same personal.
Okay, so you probably hear a lot, okay, you guys need to be S corp, right? What does that actually mean? We'll get into that in just a little bit. So we'll talk about W-2, 1099. We'll talk about some of the issues that new agents will run into, and then seasoned agents, for the most part, are going to be operating on sub-S. And then we'll open up for Q&A. Okay, so what taxes do most Americans pay? If you were to earn a W-2, which I'm sure most of you at some point in the past have earned, you get a gross paycheck, $1,000. You have to pay these 2 things called FICA taxes, Social Security, and Medicare. Okay, so that totals 7.65% of your actual payroll. It's really good to, as we go into the decision of being a Schedule C or an S corp, it's really important to understand the fundamentals behind the actual taxes that most Americans pay. Most Americans pay federal income tax, state income tax, right? And then Social Security and Medicare is how they fund those programs through payroll. Okay. As I said, Social Security is 6.2%, Medicare is 1.45%. Here are the 2020, these are 2021 rates. They were unchanged, fluctuated between 10 and 37%. In Georgia, it's a 6% tax state. So at the end of the day, if you make $50,000, when you incorporate Social Security and Medicare, you're actually paying a lot more than you otherwise would pay. People always put it in terms of what's your federal rate, but most, when you incorporate federal, state, Social Security, and Medicare, it's actually very, very substantial. Okay, when you guys are a 1099 recipient, right, whether you're a Schedule C or an S corp, doesn't matter. You're going to get paid on Schedule C from Keller Williams. Okay. When you compare this to the W-2, you essentially are getting that gross paycheck. Okay, nothing is being withheld. So if you go back over here, when you get a paycheck from a W-2, you didn't get that gross $1,000 that we just saw second bill. You got the net number, which was $790. Okay, your employer, for your convenience, withheld, $290 on your behalf. Okay, when you are a Schedule C, you get that check at the closing table. You guys do DAs for commercial. Okay, so you get a DA at the table, you get that gross check. You're, using it for whatever you need to, spending it, and at the end of the year, you're thinking, oh crap, I owe a huge tax liability. Did I pay in quarterly? Maybe that's a factor or not. We'll talk about that in a little bit. But biggest thing to understand is you're getting that gross check, and then at the end of the year, you're having to settle up on federal, state, and then double Social Security and Medicare. You're actually getting hit with double FICA taxes. You probably heard that on the news or in politics or whatever, but you actually have to pay 15.3% on every dollar of profit if you are set up as a 1099 filing on Schedule C. So your marginal bracket may appear unreasonably high because of that.
What is the rationale for that? Why do you have to pay those?
Good question. Okay, so you are the employee and the employer. So this $1,000 paycheck, all right, this example that we just looked at, you pay 7.65% federal, or Medicare and Social Security. Your employer also had to match that. So if you hire somebody for $100,000, it actually costs you 107 to hire that employee because you have to match their FICA withholdings. All right. The decision on changing from Schedule C to an S corp is solely a function of profit. Okay. Every dollar of net income on a Schedule C is subject to 15.3% Social Security Medicare tax. Okay. And so the decision on whether to change the way you are recognized from the IRS from a Schedule C to an S corp is solely a function of profit, and there's a break-even point, and that break-even is roughly $30,000.
Does that mean that if you earn a gross paycheck of 30,000, that's the mean?
So it's based off of net income. So let's say you did $100,000 gross commission income, and that's your take, not that's post your split with Keller. And let's say you had 70,000 of expenses. That means your net income is 30. That $30,000 is the number that we use for our cost benefit analysis on what's the most advantageous way for you to be taxed. So the biggest thing to understand is if you are a Schedule C, you pay double self-employment. If you change and are recognized as an S corp, the profits of that S corp are not subject to self-employment tax. There's a 15.3% savings, right? Now, obviously, there's a number of factors that will go into that. AKA, you have to run a payroll because the government basically says, Catherine, we're okay with you being an S corp. 9 out of 10 small businesses in the country are S corps. But in exchange for that, we're going to require you to take what's called a reasonable compensation from your entity. Why do they make you, the only owner of a business, take a W-2 from yourself? Well, it goes back to this. They want Social Security and Medicare. So the goal becomes taking enough officer compensation from your entity where you're in compliance, where you're following regulations, where you're doing what you're supposed to. That's how they get their fair share. I hate using that term, but that's.
So how did you determine what your salary is when you go to that, when we live in a peaks and valley industry?
So it's very subjective. Talk to 10 different CPAs, so far I'm gonna say 10 different things. The IRS does not define it objectively, which is why you're gonna get 10 different answers. They say reasonable compensation. So it becomes a percentage, right? What a percentage of your net income is. You're going to see in the industry anywhere between 20 and 70%. The more payroll you take, the more Social Security and Medicare you pay. That's not good, right? The less you take, it could put you, you could be vulnerable to potential IRS audit. I have never seen an audit from a reasonable comp standpoint.
So let's just say, I had a banner month. Okay. Like 1 month last year, I made over 100,000.
Okay.
But some months previously, I didn't make anything.
So look at it from an annual perspective. Obviously, real estate is like this, right? You got dry months and you have great months. You got to look at it from a calendar year perspective. Doesn't matter. IRS doesn't care whether you make 200,000 in January and 0 in February. They want to know what's your 2022, 2021 earnings, and it's based off of that. So further, that's why it's important to make sure your relationship with whom you're working with is not, hey, we'll circle up on April 15th of the following year, right? That doesn't mean that that's being very reactive.
So it's okay for your payroll to have one employee and that's you?
Oh, yeah. That's how most, everyone who's in a 1099 industry, like insurance people, real estate folks, the vast majority of high earners in those fields are single member LLCs taxed as S corps.
So, David?
Yes.
Just from a personal standpoint too, so we set this up where there is a payroll company that sends me a payroll check?
Yeah.
I
So.
don't like get a check in the mail from my
Yeah,
escort.
that's right. So, hold that for just a second, because we're gonna
Okay.
get into that. So this is a picture of a Schedule C. A lot of you, like you said, file as a Schedule C. The biggest thing to note and to be to observe on your prior year returns is what is the bottom line net income of that entity? Whatever that net profit is, that's what you're taxed on. So if you gross $1 million, but you only net 100,000, right? Let's say you're selling goods, right? Your margin's going to be lower. Then you're taxed on 100,000. You're not taxed on that. So that's the number that we would evaluate when considering what the best play for you guys is. The pros of the Schedule C for those of you who are filing that way, it's easy. There's no administrative costs. It's transparent, right? All good things. Downside is you get hit with double SE tax. So if your net income is north of 30, and that is a overgeneralization for the most part, but for purposes of this conversation, your net income is north of 30, then you should be considering a different alternative.
So I have an LLC, so.
Legal, LLC,
I have a legal LLC.
tax, two different things. That's the number one thing I hear is we have an LLC. So you can be an LLC taxed as a Schedule C. You can have an LLC taxed as an S corp.
And how do you set that up? Can you set that up for us?
Yes, so you basically file an election with the IRS that says, dear IRS, we want John LLC to be recognized as a subchapter S. They
Do you
accept
have
that
to do that? Is it too late to do that for?
For 2021? No, it's not. However, if you have to have an EIN. If you don't have an EIN, it's too late.
Because it took me like 6 weeks.
Yeah.
That was before COVID.
If you had an LLC and an EIN, meaning you have a business bank account, because they're not going to open a business bank account without an EIN, then you can make a late election. Then the next step would be, okay, now we got to talk to Keller, make sure they send your 1099
So
to your entity.
I set up an LLC and an EIN before I ever got my first commission check.
Right,
And
that's good, that's good.
I have the office pay my LLC,
Correct,
and then I transferred money to myself.
that's
that
correct. That's
But I put like $5,000 in the LLC account
Mhm,
just to start.
correct.
No, $6,000.
Okay.
So,
That's what's known as contributed capital, meaning you are injecting personal after-tax funds into your business.
yes,
So then float operations, that's right.
okay. So, how would I reflect that on the taxes that I put money in that business?
So the biggest thing is you just make sure you classify it as not income. Not income. So that basically means, let's say you made 100,000, right? In your bank account, in theory, in that example, you have 106,000 of cash, right? But your commission's on that. So, like I said, downside is double SE tax. That's the biggest con. So it's really, the decision to change is only a function of profit. Okay, I tell people the second level of that is consistency of profit. So if you're making 30,000 net income one year and you're going to W-2 the next year, then don't do this, right? That would not be a good fit. This is an example of a agent operating like a good agent. He did 226 gross, netted above 93. Okay, is that over or under 30,000? Way over. His self-employment tax burden was 22,000 alone. That doesn't include federal tax. So of his total federal bill, which was like 38, 21 was self-employment. Now, can you avoid all 21? No, you can't, but you can avoid 60, 70% of it. That's where the conversation of officer comp, how much to take. You can't avoid 100% of it because you have to take some W-2, in which case you're paying Social Security benefit. All right, so then,
Let's back up to EIN number.
okay.
So
If you don't have an EIN,
would that come with my LLC?
well, no, the LLC is done through the Secretary of State, but if you hired us or an attorney to do your business organization, then that would be part of our process. Do you have a business bank account?
I have it, it has a business title, but
I don't know. It's hard to tell. It's hard to say.
it has my LLC now.
And you probably have an EIN. I would contact your bank. They probably have on file.
So if I have an LLC and an EIN, would it be smart to open up, I don't have a business account yet.
Yes, so biggest thing is, regardless of whether you've been in the industry for a year or 10 years, operating like a business, separating your business activity from your personal activity is really crucial. So you would want to open up a business bank account. You would want all commission income to go in that account. You would want all business expenses to go out of that account. Whatever's left, right, you then transfer to your personal account. It's what's called a distribution. And that's what you use to obtain your household income, pay your mortgage, pay your car, whatever.
The distribution is not your paycheck.
That's correct.
It's in addition
So like I
to-
said before, so because the profits of an S corp are not subject to Social Security and Medicare, the IRS makes you take a W-2 from your entity. Okay? They do that because they want their share of Social Security and Medicare. So it becomes a balance of how much W-2 do I take versus my overall earnings of the entity. I use distributions as a way to obtain household income. So once a month, I distribute X dollars to my family checking account. That's what pays our bills. I take a W-2, a paycheck once a quarter, and I do so basically for the sole purpose of paying into federal and state tax. So instead of writing quarterly checks and running payroll, I over withhold on my W-2 so that it compensates for those distributions that I've taken every single month. It makes it a much cleaner process. It's a lot easier to plan for. I basically, every January, I'll look at the prior year, so I did this last week, figure out where do we anticipate 2022 to be, kind of back into what payroll I think I want to take, divide that by 4. Very, very simple. It does not have to be complicated. I think a lot of CPAs are just poor communicators and don't, doing extra steps does not necessarily add to complexity or strategic outcomes.
So if you're using distributions to pay personal expenses, how is that not classed as income?
It is income. So when I get a K1 at the end of the year, when you get a K1 at the end of the year from your S corp, the net income at the top would include what you distributed in theory to yourself.
Okay.
I just go about the process a little different. Your question.
I was gonna say, you mentioned for vehicle, do you not put the vehicle in the business name?
Yes, I do. Although there's some, it can be an issue of because your car insurance. I can go into that.
Yeah.
Yes, a lot of times, many times, you should have a vehicle, a capital asset in your business. So.
Does that matter whether it's S corp or LLC or?
You can have a vehicle in your business, depreciate that vehicle or take mileage. Either one, whether you're Schedule C in this situation. So actually, you can see line 9, that was their vehicle expense.
Because we're pretty high mileage. I mean, I get different, like you say, every CPA will give you a difference of opinion, but I could put, 10,000 a month on my car.
So the biggest thing I've seen is I've seen 2 audits in 10 years. One of those audits, guys took mileage. They basically say, we don't believe it. They have the power to say it. Unless you take them to tax court, there's nothing you can do about it. You hire an attorney, CPA to represent you. But they can actually say, okay, we want to see a mileage log. Realistically, keep some mileage log.
Right.
Right?
You don't keep it.
So then they're going to say, we want to see a repair statement. Yes, Mile IQ is newer, right? This was pre-Mile IQ. This was 2013. I think Mile IQ came out in 2016 or something. But they basically say, okay, now we want to see a car, an oil change showing this date and this mileage, and we want to make sure it matches to this. So, long story short, depreciation tends to be less contestable.
So you can't do mileage and depreciation. It's either or.
It's either or. Now you can switch methods, but you can't go back. So most to capitalize an asset, depreciate it over time, also deduct your actual expenses, gas, oil change, repair, maintenance, things like that.
Is it, I'm sorry, go ahead.
I was gonna say, and there's also advantages, I mean, and check with your CPA, but accelerated depreciation based on vehicles. So if you're a car
That's right.
person and you like to get a new car every couple of years, right? There are things that you can do rather than pay that money in taxes.
Right, so let's say you had a home run deal, right? Closed a big, retail space, whatever. Okay. Let's say your income is in the 37% tax bracket. And now if you spend $1, you get 37 cents benefit. So if you make $500,000-$600,000 one year where you're used to making $2, then that may be a year in which case it would be advantageous to purchase a vehicle. I never encourage people to buy things just because I tend to be very conservative from a financial standpoint. You don't want to just go spend the money you earn, but if you need a car, and if you're getting 37 cents on the dollar back, plus 6% for state, then the car may be, 50% off. Plus, if you buy an electric car, and you get the electric credit, so there's situations where the car, it pays for itself.
Is there a weight limit to the vehicles and how much you could write off other taxes?
Only if you want to elect to depreciate 100% of the value in year one.
That's a 6,000.
That's the 6,000 pounds. That's right. So if,
That's what I was gonna ask too. I saw
if
that
you
on
made the
TikTok.
500,000 and you wanted the full benefit, let's say you bought a $100,000 car and you want a $100,000 deduction, then it has to be greater than 6,000. Otherwise, you got to take it over 5 years.
So if you are not having a really big year and you're just ticking along average income, does it benefit you to lease rather than purchase, or does it make a difference?
Lease versus purchase is more of a financial and how you use your vehicle decision versus a tax decision. Most people who are in real estate drive a lot of miles, thus leasing is not appropriate, but you're going to get the benefit either way, but it's not really a tax question. It's more of a what's best for you
Okay.
and how you use your vehicle.
So David, the weight things, it doesn't apply to a sedan.
So only if the car is greater than 6,000 pounds can you depreciate 100% of the car in year one.
Okay.
Otherwise, so like,
Okay.
so traditionally,
Brand new F-250s.
Yeah.
350s. They're all.
Yes.
can you guys see this? I don't know if you see this. All right, let's say you buy a $50,000 car. Traditionally, you get 10,000 depreciation per year. If that car is greater than 6,000 pounds, it becomes 50,000. So if you're in the 37% tax bracket, that makes sense, right? Again, this is very oversimplified, but that's kind of. A lot of times I get questions, okay, what's a business expense? Code section 162 talks about what they are, as long as they are ordinary and necessary. Again, super subjective. What's ordinary and necessary? Well, it's up to you to decide. You get looked at, and burden of proof is on you to provide them. So, in your business, contract labor, advertising, telephone, supplies, retirement plans, big asterisk, health insurance premiums, board dues. You guys don't use super keys, but you have CoStar, LoopNet, all that stuff.
Do you have a quick point for those of you who do sell residential and you use FMLS? It is not spelled out on our
DAs.
sheet, in our
Yeah.
sheet. You have to ask the office for how much FMLS fees we pay. They have to run a report and you can write it off. Took me years and years and years to know
Never do
that.
So
Otherwise,
today-
you're not writing it off.
They 1099 you for the income that included what you paid out. So like, okay, so if you had,
Yeah.
okay,
So you have to ask the office, her name is Debbie Cantrell, and you have to add, or probably Nikki, but send an email and get
Doing it
a
right now.
report.
so for example, and this obviously numbers aren't gonna line up. If you close the deal and you made 30 grand, at the table, you got 29, 1,000 went to FMLS, they're gonna 1099 you for 30, but you only got 29 cash. So make sure that you, on your return, are showing 30 minus 1. Business meals are 100% deductible over the next 2 years. Continuing education, Keller probably pays for you, gifts, QuickBooks Online, legal and accounting fees, all of that's business expense. Non-cash deductions, home office and vehicle are two of the bigger ones that people talk
All right, so
about.
David, I got a question. So my cousin has a business, all right? So his accountant tells him, and I don't know how he's set up.
Okay.
Okay, but he's self-employed.
Right.
So his accountant says, all right, either pay, you're either gonna pay Uncle Sam 100,000 in taxes this year, or you need to go buy a piece of equipment.
All right.
What kind of, is that an S corp or what would that?
Doesn't necessarily dictate how they're recognized, but he's just saying, your business is profitable. Okay, if you need equipment, let's say he's in the 32% tax bracket. Okay, if he buys 10,000 of equipment, his tax bill goes down $3,200. Therefore, that piece of equipment then costs him $4,800. You know, so 68. Sorry. So that's what he means by that. Buying equipment, buying anything, buying a new cell phone, a new computer, you get a deduction for every time you purchase something. So it becomes a balance of providing your business what it needs to be successful without overspending cash, but understanding the cost benefit of a dollar, right? If I'm in the 37% tax bracket, I'm going to be spending more money at the end of the year than if I'm in the 10% tax bracket. Right? So it's understanding where you are during the year. That's what most people totally don't get. The CPA should not be a compliance focused profession, but it is. Makes no sense. I have a finance background, so I view things much different.
I'm gonna ask you a compliance with a question though. Out of all this, is this expensive as a realtor? Do you think it's some type, certain type that would kind of give them red flag from the IRS point of view?
No, I mean, it's hard to, without giving an example, it's hard to comment around.
Because my,
So
yeah,
I will tell you, we have an agent in the office that has been audited, quite painful, but she apparently used her home office and deducted that and paid office here.
oh.
So that's
Yeah.
not wrong. If you pay for actual physical office space, that's a business expense, right? Or in 2022, everyone works from home. You can also take a home office deduction. The difference is there's two methods of taking home office. Where is it? Standard or simplified. I pretty much only take simplified, which is what's called the safe harbor. The IRS gives you a certain allowance for home office. It's much smaller. But if you do the standard method, that's where, okay, I live in a 5,000 square foot house, 500 square feet is my office, therefore I'm a pro rata. My real estate tax, my insurance, that turns that to be a much higher deduction, but it's fudged most of the time. So I don't do that. I use simplified. I tend to be a little bit more aggressive, but at the same time, I understand where people are going. I typically don't play with that.
Now, having the IRS come in my home and measure my office is not.
Are you kidding?
No, they would.
I got audited once and I had to pay attorneys $11,000 to keep me from paying the IRS an additional 33. And then it got to the point, they offered to settle at 7 and the attorneys were like, you'll win if we go to court, but it's gonna cost you more in attorney fees to go to court than paying the $7,000. So I threw in the towel and paid
Well,
the
Walmart
$7,000.
settles all, that's why these companies settle all the time, 'cause it's not worth the professional representation.
You don't want it. I almost would rather have just paid the 33 and been done with it. It took 2 years to settle it.
So that entire story is why David is here today, because a lot of us could get into trouble without even knowing it.
Yeah.
Setting up the
The biggest thing
LLC,
is
what you
just
wanna do.
understanding, like, I tend to take a lot of time on the front end because it's very important to understand why things are done, right? It makes the relationship much better. I tend to have very little turnover because we're all on the same page every single year, right? It's, if a client comes to me and says, hey, David, I just want you to handle it. I don't want to be involved. I don't want to know anything. I don't work like that personally. Maybe a different fit, but if you want to understand the hows, the what's, the whys, be really clear in, your process, I think you'll be a better business owner and more profitable.
Let's go back to the payroll.
Or like a tax consulting. class.
Payroll, so if I go S corp and I have to have be paid a salary or whatever.
It's too late for 21.
It's too late for 21. So do I hire, is that something you would do? Is that a payroll service or? how?
We have relationships with third-party payroll providers. We tend to do very, very little payroll in-house. We do some. But again, I view our role as a consultant essentially to provide an after-tax network. So we don't create our day-to-day operations based off of payroll and bookkeeping like a lot of CPA firms.
David, can you speak a little bit more to that definition as far as how the IRS views home office? Like, can it be a guest bedroom with a desk in it?
It's,
You know, expand upon
yeah, the
that a
only
little
two
bit.
terms are exclusively used for business.
Yeah.
So,
It needs to be a dedicated space.
I mean, at the end of the day, I would use the simplified method if it were me. And take what they give you. Move on. You know, try and shave dollars in different areas.
So would you prefer to go ahead and get through your slides and then we'll take 10, 15 minutes at the end for?
Yeah.
Well, it doesn't matter. I'm
Okay,
flexible.
however you want.
Either one is fine. These are all just.
I feel like we need to be in here about 3 hours.
Oh my gosh, I'm already thinking that's fun.
Other considerations, the number one thing I get is, hey, I have an LLC. What does that mean? That means you're recognized by the Georgia Secretary of State. Has nothing to do with the IRS. You can have an LLC and be taxed as a Schedule C. You can have an LLC taxed as a partnership. S corp. That's a tax election that we basically make. Regardless of whether you're Schedule C or S corp, making $10,000 or $1 million, have a business bank account and open it with your LLC and EIN. All commissions go in, all business expenses go out. Prepare a new W-9 with Keller, make sure they 1099 their entity, not their social security number. Just talk about that. Get QuickBooks.
I was gonna ask you that, is that the easiest one for us to use for CPAs to?
Yeah, 100%. Get QuickBooks online, get the cheapest. Yeah, get the cheapest. There's no reason for business to get.
I was late, so forgive me if you've already answered.
No, you're good.
So when I started with KW, I didn't have the requirement.
Yep.
But before I got my first commission check, I set all of that up.
Yep, okay.
But my question is it too late for 2021 to give them my EIN to have them?
That's a Keller question.
Okay.
If you work with a small business,
They're gonna send you an e-gift card, okay?
they know the deal. If you work with a small business, like, sure, we'll do it. If you work with Polo, you're gonna say no. I have no idea
Okay.
what HR.
Okay, so it just depends on the office.
Yeah, they probably are.
But if it's
I would anticipate they say no,
Yeah,
in which case, January, make sure we do it for 2022. So prepare a new W-9, say, we want 2020. This entity.
so my follow-up question, and again, forgive me if you've already
Yep.
answered this. So if I did everything
Okay.
through my EIN, like all of, like, if I got a deposit for a commission or a commission check, I put it into my business
Yep,
account.
yep, that's
How
good.
does that impact everything if my, like, W-9 is in my?
It doesn't, we can,
Okay.
whoever does your
Sam's credit card, you like to set that today?
social to the
Okay.
entity,
Okay,
it's basically just moving it on paper.
okay, so not that
How do I mute
complicated,
people?
but
I
it
mean,
would
for
just be.
you,
I have one credit card and I'm sticking to it. So right now,
You're-
it took time to get there. No, all I want are airline miles, that's it.
Getting Kathy? I don't know how to mute people, but whoever's online, if you can mute yourself,
So,
that would be great.
For 2022, okay, I did an LLC, like I mentioned, but for 2022, I will have another business that's separate from real estate. And I want to do like an umbrella LLC. Okay. What should
keep
you
them separate.
just have two separate LLCs? Okay, that makes it simpler.
It used to not really matter from a financial standpoint, but now the IRS treats different business industries different ways, which I totally disagree with. It's just the way it is. If you are what's called a specified trader business, you can be taxed differently.
Okay. And then would you need two separate QuickBooks subscriptions, or can you do two businesses under?
I would keep separate. The only way I would keep together is like, for example, okay, I have residential property 1A and 1B. I then, or that sounds like it's the same location. Let's say I have a location on, X Street, Y Street. I actually obtained one QuickBook file out of two locations. You have two restaurants, you can do one entity with two
Similar.
locations, but if they're two totally different business practices, I would keep them separate. Where are we here? Yeah, definitely get QuickBooks. If you're not comfortable with it, hire somebody to do it. There's no reason, because a lot of times, it's important to understand where you stand as a business. I can't tell you how many times I will ask a client, and this will be like in December, I'll say, how was your year? They say, no idea. That's a big problem. All it hurts is yourself by not knowing where you're at, right? It's really, really important to be proactive.
I have one more question. I don't even know if it's completely related. So you have an LLC and EIN, and you're married, and your spouse also has an LLC and EIN.
Correct.
We typically, prior to having all of this,
Yep.
we will file jointly. But should we file married and separate?
No, you still file jointly.
Okay.
When you file jointly, the IRS considers you one taxpayer. Your income, your husband's income, it goes into a pool of income. Your tax is calculated based off of that pool. And depending on what you paid in, you either get money back or you go.
Okay,
So it doesn't matter. It's just, let's say he has a W-2 and he owns a side business. Okay, his W-2 goes into the pool, your Schedule C or your S corp goes in, his business goes in. So that doesn't implicate, that doesn't have an implication on your filing status.
thank you.
That selection is made on Form 2553. It can be done after the year, but it has to, you have to have an EIN in order to make that election. Because you're basically saying, dear IRS, we want EIN number 12-34567 to be recognized as an S corp. If you don't have the EIN, then there's nothing for them to switch. Does that make sense? Seasoned agents. Okay, so this is an S corp. This is page 1 of an S corp return. Like I said, profits, whatever shown on line 21, which is what you get a K1 for, is not subject to 13.3%. Big savings. There comes a point where savings and self-employment taxes from being an S corp outweigh the cost of operating like an S corp. Again, this is a super overgeneralization. I always tell people cost 3, benefit 3 at $30,000 of net income. Overgeneralization, but that's kind of what it looks like. If you're making 20,000, well then don't make the election. If you're making 100,000, make the election. Save money. So, break-even point is 30,000 of net income. If you historically operated as a Schedule C and you net more consistently, then it would be important to at least consider what the option is. Considerations for seasoned agents. Obviously, consider where you are from an income standpoint. You have to take reasonable comp. There is actually an extra layer to the reasonable comp conversation. Once your income is north, so I'll take a step back. In 2018, the tax law got changed. They basically said 20% of your self-employed income. So think of, say you got a K1 for 100. 20% of it, or 20,000, is a deduction on your personal return, just because tax cuts were cut across the board. All right, so that's a good thing, right? That 20% deduction that you get can get phased out. And it can get phased out as your income rises. All right. that range of phase out for married couples, like 320 to 420. So if you are in that range or north of that range, planning for what you take as W-2 is increasingly more important because your 20% deduction then becomes a function of your W-2. They do that because they're saying, hey, if we're going to give John a 20% deduction, we want to make sure he's taking enough W-2 comp. I know it's a little more involved, but your 20% deduction is limited to 50% of your W-2. So if you're in the 320 to 420 range, planning for what this is really important. Because let's say you take too little W-2, then maybe you don't get huge deduction on your personal return. Really important.
So let's calculate that. So if my W-2 is 100, then the 20% will be only 50% of 100, 50, and then 20% only 10 grand.
So if you're north of that income range that I mentioned, and you took a $100,000 W-2, okay, the 20% deduction is limited to 50% of your W-2. So that would be a $50,000 deduction. So let's say you were going to get a $70,000 deduction. Well, then we want to make sure we take 140 in W-2.
Okay.
So the extra Social Security and Medicare that you'd be paying on that extra payroll is going to be far outweighed by your 37% times that extra, deduction.
So for us,
So,
when do we plan that? It's
so it's
too late.
important to revisit it throughout the year.
Oh,
That's why the relationship that I have with my clients is more a continual process as opposed to like, we'll see you one time a year.
yeah.
Because at the end of the day, it's what your after-tax net worth is, and having these conversations could be $10,000, $15,000. So it's just, it's important to know where you're at and continuously revisit that during the calendar year.
So, see, my husband is, has a job with VA therapist, and then I have worked in 99.
Right, yep, that's right.
We've already established that I don't get too rewarded, which I'm changing. So I guess if you would have a conversation about how to set up my business, because we file jointly, you would need to have my husband there too, so that we can work with his.
Not necessarily. Obviously, your structure will impact your joint return, but the decision on how you're recognized from the IRS wouldn't necessarily involve his income. Your decision.
I'm looking at that 20% deduction, and I'm just
We-
asking myself, would I have, has it been?
Your decision is solely based on what's my net income. If it's north of 30, again, oversimplification, I get it. If it's far north of 30, don't be a Schedule C. If it's 30, probably keep it the same. Wow. So then essentially you're just overpaying Social Security taxes. Can you avoid all of it? No. Can you avoid 60%, 70%?
But we're all gonna get the Social Security back when we retire, right?
If I could opt out, I would.
Yeah, you're gonna live well.
I mean, it's good if you're taking it now because they're giving people, like a 5% inflation benefit and an 8% bump if you delay.
Yeah.
So if your vesting age is 66 and a half and you wait to 67 and a half, you get your 8% plus your 5% inflation. So I would tell people, don't take Social Security, wait.
Oh, yeah.
Or 67, what'd you say, and a half?
By the time we
I'm
get there,
saying
it'd be
most
70.
people in this age range, they're told the age is probably 66.
Okay.
I don't know.
I'm not there yet, just for the record.
It's good to look up your benefit. I mean, if you've never looked up your benefits, it's good to do that.
Yeah.
I haven't looked at my benefits, so I'm hypocritical saying that, but
You're young.
I have a long run.
Car mechanics drive the worst cars.
College kid has no shoes,
And
right?
mathematicians don't balance their checking.
Right.
So, I I'm not surprised you haven't looked at that.
I mean, it's irrelevant, it's irrelevant.
I know.
I'll pretend it's zero.
So how long can you talk for? We've got, probably 5 minutes.
Yeah,
I just want to
no,
respect
we're,
your
I mean,
time.
it's, like I said, this kind of just represents what I was saying to you about taking enough W-2 to maximize that 20% deduction, right? It used to be just a single decision of, how do I stay under the radar and not pay a lot of social security Medicare? Now it's, how do I do that and maximize? Just other notes, like I said, business meals, 100% deductible. Be weary, be cautious of what you're doing at home office. That is a huge point of emphasis from the IRS, along with conservation easements. Biggest thing, operate like a business. That's the biggest thing. Keep your activities separate. Don't deposit your commissions in your personal checking account, and then, give your CPA a piece of paper that says, I think I spent this, I think I spent this. Really operate like a business, even if you're a Schedule C. It'll help you as you move forward. Focus more on tax planning versus tax compliance. $90,000 realtor without a plan brings up 60. $90,000 realtor with a plan brings up 75.
Very good, Captain.
So the moral of this story, I got 2 things out of this. First of all, if you don't have an escort, go do it. And second
If
of all-
you're,
Yeah, well, right.
'Cause I
if you're
think-
within.
a lot of CPAs will put more people into S status than need to be. I see a lot, they probably do it to raise their top line. It's not right, doesn't help the client. It's gotta make sense, right? That's why I try and focus on explaining where the real cost benefit is. How much will I save from making this decision?
So to my next point, just contact David and he can take a look at, I think you need your previous tax return to him, and then he can tell you what you need to do. Now, David, when do you get extremely busy, like tomorrow? Probably
Yesterday.
yesterday. I mean, he's about to be hit with, we've got a March 15th.
CPAs are looking for a job, please let me know.
Yeah. So if you're interested, you need to probably jump ship now and contact him. Why would you pay more?
Do what you can to control 2021 exposure. Make changes as soon as possible to make sure that you're set up right for 2022.
So if we use you, how often do we have to drive to Watkinsville?
A lot, honestly, 80% of my clients are in the perimeter of Atlanta. So I used to work across the street off Satellite. Used to work in Buckhead. I just moved a couple years back.
So we send you stuff electronically?
Yeah, I have a portal. I'm completely paperless. I come to Atlanta,
There
I
you
talk. I have, like I said, most of my clients here, I meet here occasionally. For most people, once we've established a relationship, then we can do everything via Zoom or Teams.
So just to,
But it's what you're comfortable with. I mean, some people say, I want to live across the street from my CPA.
No.
Okay, what I wanted to do was basically just business owner expenses. So how do you differentiate being a realtor? So how can you help realtors? Can you-
Sure. I think part of it's just the transparency of understanding what you do, how you earn money, expenses that you incur versus working with someone who doesn't, it's like going to a specialist for, let's say you have an issue, going to a specialist as opposed to a general practitioner.
so
That's
a
basically-
for sale by owners trying to sell their house, what's your script there? That's a script to you right there.
Yeah.
So use that.
It's the same thing.
Yeah.
Could you
Why would you?
work with a CPA that doesn't have real estate exposure? Yeah, 100%. I mean, they could be great.
So
Or not.
if we hired you, you would actually be doing 2 tax returns for us, one on our personal and then one on our LLC?
If you were to make an S election, yes. Or for those of you who have already made an S election, then it's just taking that relationship and continuing on, trying to be more efficient. etc.
One last question for me. Saving receipts.
Mm.
Do you have to keep those original things, or can you scan them into QuickBooks, or what's the best thing
Yeah,
to do?
I scan mine in QuickBooks is how I do it.
And then that'll just store them for you to get all it.
Yeah, it's at 7 years. We don't need receipts. The burden of proof, if your audit is on you, to substantiate that expense to you.
Okay.
So you keep them.
Yeah, okay. So
Thank you.
it's an app called Scan It All. And when you're paying for his lunch or something, you get out your app and scan the receipt right there.
I scan mine. I pull up the QuickBooks app on my phone.
And
Oh.
QuickBooks
I
app
scan
will
it
do it.
David,
Yeah,
why are we
that's
doing
right.
that? What, the statement says everything.
What statement? Says
Credit
you-
card.
So,
I got
good,
files.
that's a good question. Again, if you talk to 10 different people, I can tell you 10 different things. The one of two audits that I worked with, it was a car dealership consultant. Okay, guy traveled all over the country. They basically said, we want to see a receipt for this trip to Dallas. And I said, here's my Amex. Because there is no receipt. They said, we want a receipt, we want to see a receipt. And so what you get with the IRS is people that have, people want to say no for no reason. They want to control. So keep anything that you have a source document for, keep it.
Wow.
Don't just use your Amex. Now, if there is no receipt, then obviously there's no receipt. But you want to do your best that if you're ever looked at, you can provide them everything they ask for and then some, so that they go away.
Oh, God, my life.
That's basically.
I can't live like that.
So another infomercial for David, he also offers bookkeeping. So let's say you take your client to lunch, you have a receipt, you scan it in. Somebody needs to enter all of your expenses into QuickBooks. I think we know I won't do it. I can't do it. I was having, a different friend doing it,
It
But I
definitely
can
engage
get-
somebody.
but you don't need.
We do some of it in-house.
How many calls are you missing because you're sitting there in front of your QuickBooks doing that? You need to go be making your calls and get somebody else who needs, it's called leverage, right? We've heard that word. He offers that as a service. So you take somebody to lunch, you get the receipt, he enters it into your QuickBooks at the end of the year, or actually at least quarterly, you need to print your P&L. Where are you? How much money have you made? How many expenses do you have? And then he needs to know that. You need to
'Cause you
to
can't-
know that your business.
You can't run tax planning projections without data. So if you don't have financial statements, it's impossible to run projections. People will say, where am I gonna be at year end? I have no idea. I can't, I'm a magician.
And my old CPA was, well, you need to write yourself a payroll check. No, he offers that. Okay, I can't figure all that out because I'm supposed to be out making my calls and doing what I'm doing, right? So this is a great leverage. It's gonna save you money in taxes and save you time in doing your books. And you need to be keeping books.
I have a question. Is there any protection that Pathwise provides in regards to if you're audited?
Yeah, I get that question a lot.
No, no
You can-
CPAs do
Yeah,
that.
the answer is no, not really. If it's something that we did wrong, obviously that's a different story. That's what, insurance is for, right? But you hear like TurboTax and H&R Block will say, oh, pay this extra $200 and we guarantee representation. It's a gimmick. You can be audited from a random reason that is not your fault, not our fault. It's just random. You can be audited from statistical analysis from where certain business expenses should be from a percentage standpoint. So there's a lot of reasons why you could get a notice or could get an actual audit. That may not be your fault, it may not be who you're working with's fault, it just may happen. So,
We can ask you to come with us for a fee.
oh
to
yeah.
sit there, 'cause
yeah.
I
So you
don't
have to be
know.
an attorney or a CPA to represent a client for tax court.
I don't wanna sit
Again,
there
I've
by
seen
myself.
2 audits in 10 years. If you're staying between the lines and keeping yourself out of trouble from a vulnerability standpoint, you should be fine.
I was just gonna
They
see if we
scare
have any
you for a
questions.
reason.
Yeah, they do scare me. I got
We have
over
your
this.
plan with you soon.
David, someone who couldn't be here, she wanted to ask if you can briefly say whatever is important about section
168.
179.
Yep, so that used to be the section that most people utilize when wanting to depreciate a larger portion of their car beyond this.
Okay.
Used to be called 179, it used to give you 25 grand, now it's higher. But there's something called 168K, which is bonus depreciation, which is more applicable.
168. Okay.
So I just wanted to thank everybody for coming. I think You all learned a lot. We have a
This is
lot of
great.
questions, but I think we addressed most of them.
I've got some cards, if you have any questions, I mean, I'll be here for
And
half an
that's
hour probably.
CPA, in case you're wondering, online. And it's residential and commercial. If you sell real estate, contact David. Just do it. That's it. Thank you guys for coming. We will have another, next month in February, we're teaching a class, Introduction to Real Estate. It's 3 hours of CE,
Commercial real estate.
of commercial, thank you. Introduction to Commercial Real Estate, right. And it is for 3 hours of CE, so it'll be February something. Look on the calendar, and I'll post it also on the Sugarloaf Facebook page. Haley's gonna keep me in the techno stuff. And thank you again for coming. Thank you,
Thank
David.
you, David.
Some keys for a client. I'll meet you there.
Oh, okay, yeah, I've got my folder good. Well, we'll just talk about it later. I got a good situation. All right, thank you. See you there.